everybody hates paying taxes. I get it. But listen, my statement I made in the first book is still true. If you didn't pay taxes, there's only two possibilities. You didn't make any money or you cheated. And both of those are bad.
You can feed a cow every day and have milk for the rest of its life, or you can starve it and have prime rib for dinner, says today's Ask an Expert. Hi, I'm Joshua Carlson, co-founder of Propelo Media, and today I sit down with Greg Crabtree. He's a partner at Carr, Briggs, and Ingram. It's an accounting service firm, and he believes that accounting should be much more than financial statements and tax preparation. It should be a way for you to more efficiently and more educated way to operate your business. Today we're going to talk about several things, from the optimal labor efficiency, where you should measure that for your business, and why you should continue to improve that metric. He's going to talk about why 50% is the minimum that you should look for invested capital return. And he's also finally going to talk about a book he wrote called Simple Numbers, where he digs into a lot of that. But the principle underlying for any business out there wanting to create content is that you have to ask yourself, are you wanting to change the world, or are you wanting to create a marketing engine? Hint here, if you change the world, the marketing engine will follow. Now let's hear what Greg has to say. Greg, thank you for coming on our Ask an Expert series.
I appreciate it. Thanks for having me.
Okay, so I want to start off, you guys were privately held for a long time, and you recently went through a merger. I'd love for you to just share the experience of what that process was in the beginning when you're just thinking about it, and what the actual process was going through it.
Yeah, ours was kind of unique in a sense that, I wrote my first book, 10 years ago. My next book's coming out. And as I was working on that new book material, we've created quite a unique consulting practice. And so we kind of took the accounting firm model and flipped it around the way the rest of the industry looks at it. Most other accounting firms that are trying to get into advisory services, they're taking auditors and tax people and say, hey, when you're not doing an audit or you're not doing a tax return, hey, why don't you do some consulting work? And it was kind of a tuck in. Well, when I joined the Entrepreneurs Organization back in 2001 and started primarily deciding to hang out with entrepreneurs instead of hanging out with accountants, I realized that, it was a good move. The entrepreneurs kind of told me, what they were missing in that need. And realistically, as a profession, I'll tell any of my peers, we've got it backwards. We're our first and foremost task ought to be to help people run a better business with better data.
Right.
And then, oh, by the way, do we need financial statements? Do you need tax returns?
Yeah.
And granted, there's professional standards and those things that you got to deal with. Are you independent and blah, 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 and all that, but, what we found is we don't need to produce independent financial statements to help our clients get financing and other things. In many of those cases, we've been able to get the banks to look at us as not independent, but at a higher value of production of data, in that process. And so, anyway, that being said, I mean, we're the unicorn in the accounting world, that we just have boundless inbound demand. I mean, we do not knock on anybody's door. Okay. They all knock on ours. And so as I saw this growing, and as we struggle to add team and talent and grow them as fast as we can, my biggest challenge was actually in the traditional work of tax and audit and financial statements that I couldn't hire those people fast enough in the market. Our office is based in Huntsville, Alabama, and pretty strong government contractor presence in Huntsville that really, I think, kind of sucks up all the accounting talent. Okay. And so I had to look at this and I said, I got two roads. I can either be a very niche consulting only practice, or I can really do what the customer needs, which is they really want us to do the consulting and coordinate the tax and any financial reporting, necessary when possible. And so as I was finishing up the book last spring in April of 19, and I reached out to an advisor in the industry, and he connected us. He felt like there was a couple of firms that might be fits, and there was clearly, I think the firm he merged with, Carr, Briggs, and Ingram, they're a top 25 accounting firm. We had about 2,000 employees, 35 plus offices from North Carolina to New Mexico. But really good cultural fit. We've just thoroughly enjoyed every person throughout the firm we've gotten to know, and work with. and I think they're still just trying to figure out what we are, in that process. But it's been great because, we're now, through the merger process, we're getting on their platform, and we're able to, we shared quite a few returns this year. We'll share a lot more returns next year, that will really get us to where we can deliver on that service standard that we strive for with our clients, because we didn't hit it as well as we wanted to this year, but we're going to get there.
Right.
But we're going to be able to have a broader platform, because when the new book comes out next month, in October of 20, Simple Numbers 2.0, I mean, I think that book is going to be a game changer, because it is the summation of everything we've learned from our consulting practice in the last 10 years.
Okay.
And I knew that was coming, and I could see the impact of that. And as I gave speeches on the material, even before the book was done, we got a chance to really change the trajectory of a lot of privately held businesses with their fortunes and that we see every day, and just be able to do it for more people. And I was not going to be able to accomplish that on my own. And I, I'm not ready to retire. I mean, I may have some gray hairs, but I'm not ready to go to the house yet, because I enjoy what I get to do every day.
Right.
And so that was the main impetus for the merger. But here's the other thing that I learned. I underperformed all those years that I was accountable largely to myself. I had two partners, but I was the majority owner, and I had forum members that you kind of peer groups that you try to hold yourself accountable.
Sure.
You've got to grant accountability to be accountable, and I admittedly didn't grant enough of that accountability. And now, as the partner in charge of my office, and it's almost like I picked up a few more administrative duties that I had delegated, to other people in the firm before we merged. Some of those I kind of got back because of my role as a partner in charge. But I think it's made me better. I think we perform. We're addressing things that, as an owner of a business, what you have a tendency to do is to accept lower profitability because you just don't want to deal with something. And I've contended this for years. I mean, you will defend your salary long before you'll defend profit.
Right.
And so we were profitable enough that I never had to worry about defending my salary, but I left a lot of profit on the table because I didn't manage as well as I should have.
So what do you mean by grant accountability?
Yeah, when you are the owner of a business, you may have peer groups, but are you really going to respond to when those peer groups challenge you on are you going to deal with it? Right. And COVID impact is a great example. I have said this consistently over the last several months. I have seen more business innovation in the last 3 months than I've seen in 5 years. Right. Now, why is that? Well, we've got this crisis in front of us, and crisis creates focus. And the things that our clients are dealing with to create innovation are things that we put in front of them in many cases for years.
Right.
But the crisis spurred them into action. And because it spurred them into action, now their business is actually primed. And we're going to see the same effect coming out of COVID that we saw back in 2008. 9, 10, and 11 were 3 of the most profitable years that our clients ever had. There were more new businesses started in the 3 years after the last recession than had ever been started before. And we're going to see the same thing again. And so when you truly grant accountability, that's when change happens. Because let's face it, most of us are just not really good at being accountable, to ourselves.
Right.
I mean, you're going to ebb and flow in and out of it. And, it's like, okay, I have every intention to go to the gym, 3 times this week. Hadn't made it yet, so things like that happen.
Okay. So you mentioned Simple Numbers 2.0, but the original or the first book you wrote, Simple Numbers, a decade ago, what was the genesis behind putting that book together?
Yeah, so one of the, I was a kid that grew up on a chicken farm in Alabama, so I never thought I'd travel past the Mississippi River. And then I joined Entrepreneurs Organization in 2001. I was in the Atlanta chapter, which is a 4-hour drive.
Okay.
So here I am driving to Atlanta every month for forum meeting, 4 hours to Atlanta, 4 hours in the forum meeting, 4-hour drive home. but it was just an incredible experience. And the guy, my client who got me into the organization, told me about it. He ended up getting on the local board the next year, invited me to be on the board, and here I am now. I'm on the board of something that's in a whole other city that I don't have clients in.
Right.
And but it's like it just kind of exploded from there. And then I ended up getting. There's not a lot of accountants in EO, so and I was one of the early members of the Standing Finance Committee, and then served on the EO Global Board from 06 to 09. So I always like to tell the story that I didn't have a passport until 2003, but since 2003, I've been to like 45 countries.
Wow.
I've delivered my material in 15 countries, around the world. And so it was just an incredible experience. So as I was rolling off the global board in 09, I mean, global board service was about 12 weeks away from the business a year. And so I looked at that and I said, well, I can either just go back to producing more billable hours, or I can do something significant. Mm-hmm. And I took those 12 weeks of the year and created the first book, and did a lot of speeches to perfect the material in our accelerator program that EO runs. But essentially the first book was kind of geared to that 5 million and under size business, but yet we found plenty of people over 5 million find it useful. The new book actually has no bottom or no up. I mean, it is, I think this is kind of what I believe as a practitioner that studies entrepreneurs. I think the new book is the essence of what every business owner that wants to run a successful business needs to know. And it's not in the form of academic accounting. It's more what I kind of commonly refer to as functional accounting.
Okay. And,
general accepted accounting principles is a necessary thing, or international financial reporting standards, if you got international listeners, but at the end of the day, it's not how people truly manage their business. And yes, this is truly more of a methodology to say, hey, how do I create value? And then how do I redeploy value to its highest best return? And that's just the lather, rinse, repeat, process.
So let's talk about some of those metrics in there, because I get where you're coming from. When we think accounting, we do think the arduous side of things, but the reality is accounting can be a very powerful mechanism in order to operate and to, honestly, to fuel your business for growth. So what are some of the things that you reveal to businesses that are important in that book?
Well, I mean, I think our theme continues to be first and second book, is that the number one thing that creates value is the output of labor. It's not holding labor as a percentage to something. It's identifying which labor is productive and how do I get more of it, and how do I enhance that labor productivity either through technology or process improvement. And so our concept of looking at labor with an output measure of gross margin, not as a percentage of something, it has been revolutionary, I think, to our clients. And it allows them to run their business much like a professional sports franchise. We talk about the concept of the salary cap. Okay. We think every business has a native salary cap that says, this is all I can spend for labor, and here's what it's got to produce. And I can't just keep throwing labor at it when it's not going to move, the top line, right, that it needs to produce at. And so I've eventually got to get into an efficiency concept that says, why is that efficiency not there? And so having the metric opens up your eyes and your intent to go change either I got the wrong person, or they're not trained properly, or I don't have a good process. And many times it's all of those three, okay, in that. But you can but labor efficiency ratio is the way we define it, gives you that ability to measure success. And essentially the way I define it is, you think back in the 50s, it was widely believed that no human could run a 4-minute mile until somebody did.
Right.
And when Roger Bannister ran it, just go look it up on Wikipedia. It's a fascinating story. And that it wasn't him alone. He picked a flat, level surface to run on. He had a V of people running in front of him to block the wind. He had a runner running every mile split with him to keep him on pace.
Right.
Well, that's the picture of what we need to be doing in business.
Right.
But the thing is, they had a clear, specific measure. Can you run a mile in less than 4 minutes?
Right.
which means I've got to run a sub-minute for every mile.
Right.
Or if I miss on one of those miles, maybe maybe the idea, I don't know, I don't remember the split times, but maybe the last mile he was over a minute, but he had to get some. I got to be ahead of the game
Gains
going into
early
that
on.
last mile,
Right.
or else I got to go into the sprint and kick it to catch up.
Right.
And is that not a picture of business? Well, the thing is, what's the mile record today? What, I think 3 minutes and 35 seconds or something like that.
Sure.
I mean, it's incredible. I mean, we got people running 4-minute miles for a marathon now. And I mean, and it's a fascinating story to go read. The guy that ran it was an unofficial, but it still, he did it. He ran a 26 miles in a sub 4-minute pace.
That's incredible.
It's just phenomenal.
Right.
But you do it through process, through training, through measurement, and that is essentially our methodologies, to a T.
Well, let's talk about that measurement. Let's just say it's Acme business. I don't care what it is, but they come to you and they hire you guys to help them look and evaluate the labor efficiency. Is there a baseline metric that's kind of global, or is the labor efficiency metric, is that something that you look at that's unique to different industry?
Yeah, see, and this is kind of one of my pet peeves. Everybody wants a number. It's like, well, there are some industry numbers that are tighter than others, but I always caution people. I said the number you need to measure to is your best ever of your number, and then you need to beat that and beat it again and beat it again and beat it again. Right. And every client that we work with, because I can win an argument of what you have done and beat that number than what somebody else has done. Right. Because you got tons of arguments of what somebody else is. But a lot of it is everybody needs to understand there's 1,000 ways to do business. You can be in the same industry and run a completely different set of plays.
Right.
And so don't lock yourself into that. Look at what, are you going to be a passing team? You're going to be a running team. You're going to be a defensive team or an offensive team. Now, where are you going to spread the salaries around on your salary cap? Am I going to have a great offensive line, or am I going to have a great quarterback, but he's going to get killed because I don't have anybody to protect him?
Sure.
So you look at all those things apply to business. And so, but once you can measure them, you can start to say, okay, if I change this, how does that improve? And labor efficiency, it's not it's not a static measure. It's a moving measure.
Okay.
Is it getting better? Is it getting worse?
Right.
And see, this is our problem with traditional financial reporting. We do not present reports in a way that tells a story. I've got to create flow of data to tell me the story that is developing. And I can look back in time and look at a trend and say, this is the story it's telling me, which the momentum of that story is going to tell me what's going to happen next, probably regardless of what I do.
Right.
And can I do something to alter that? Or is that, a sunk, cost, or a sunk idea?
Well, I like this because it gives a tangible metric to something that I feel is previously intangible. Let's take customer support, for example. I'm sure you can have metrics within that, but if you're bringing on 3 new people and you see that trend line start to diminish, you've either hired the wrong people or you're poorly training them. And so it gives you that lever. Going back to the book, you mentioned you had this 12-week window. What was your process to actually sit down and just grind it out?
Well, considering I grew up on a chicken farm and I have a really struggle with subject-verb disagreements, I had a lot of help in this book. So I had done presentations, and so I sat down and tried to write, and I'm not a natural writer, or wasn't then. I can write. I actually did do it now, but then I just created 10 chapters of material, did 10 presentations, hired a writer to work it into an original manuscript, and then I went through a company called Greenleaf Book Group in Austin, Texas, and they helped do a manuscript development. So it was an expensive process. There's tons of companies now. There's more now that help people write stuff.
Right.
But the thing that was important to me, and here, if anybody's thinking about writing a book, here's the deal. Are you writing a book as a marketing prop? Or are you writing a book because you want to change the world? And I wasn't sure if it would sell any copies, but I knew that I was creating content that I felt very passionate about that would help change a lot of businesses. And so the important thing to me was, if you use somebody else to help you write, you've got to retain your voice. And so people, I don't understand this, but people say I have a little bit of a Southern accent. I don't hear it, but I mean, I'm known for my Gregisms. I mean, I have some sayings and things that, you can keep your cow healthy and milk it every day, or you can starve it and have one barbecue dinner. Which way do you want to go? And so those are things that, it's funny when I hear other people say it and I go, nah, you got to say that with a Southern accent.
It doesn't work without the accent.
It doesn't work without the accent.
Right.
But I was really proud that Greenleaf and the people who helped me with their team, keep my voice in that. And so I kept relationships with one of the editors who was on contract with them, and she helped me edit most of this new book.
Okay.
And then my daughter, who's quite gifted in English, she got her mother's genes instead of mine. She finished it up because my Gene Hansen, my original editor, she got pulled off, to another project about 2/3 of the way through. But we kind of had the framework going, so we're in pretty good shape at that point. But I learned a lot in the process, and so the new book I wrote a totally different way.
Okay.
In that I would go do a writing retreat. So I'd go away for the weekend, and I had a 5,000 word limit that I had to get written while I was gone. And I found that getting away from town, it worked for me. It may not work for everybody, but I talked to another writer who writes fiction, and that was kind of, I picked up that idea from him, and it was quite good, to pick up that idea, because I was able to make a much more effective process to make progress on the writing, in that stat. And then it just gets down into the minutia of editing and proofreading and graphics for the images, and working through getting the printer specs, and Amazon, and I've got a good Amazon consultant. I've got a great printer. Bank Printing is my printing company, and I would highly recommend. And the thing that most people don't realize, and here's my other thing about writing a book: do not print paperback books. They're crappy. If you're going to pour your heart and soul into something that you believe stands the test of time, it deserves to be in a hardbound book.
Right.
And I cannot believe these people who print these crappy paperback books, because here's the thing you don't realize: it's cheaper to print a hardbound book. I mean, generally the average cost of a print-on-demand lightning source is about $5 or so, maybe a little bit more. This new book is actually 4-color the whole way through, because I wanted color graphics instead of black and white. And 4-color all the way through is, I think my landed cost is like $220 a book.
Wow.
And it's like, don't do that. It's sad.
I hear where you're coming from. It just carries a little bit more substance. But the big takeaway that I heard there was that, are you writing for a marketing piece, or are you writing to change the world? Right. And I think, ironically, if you write to change the world, it becomes the marketing piece that I think a lot of people glamorize when you're talking about content. So that changing the world aspect, you obviously had a great point of view. You've got great insights, rethink accounting to make it an operational part of your business as opposed to a monthly reporting function. Let's talk about what the book has actually done for your business. You mentioned, you've been in 15 countries talking about your own content.
Right. Yeah. Well, I totally underestimated the power that, it does give you sway with doing speaking events if you have a book. Because at least it's kind of they don't know if you can talk or say anything intelligent, but at least you went to the effort to write a book. And so, it is a little bit easier to get invited to do speaking gigs if you're a published author. But then the market starts to evaluate you and say, do you know anything? And then as those people, and I don't have a speaker representation or anything. I just respond to requests as they come in. And, and really it's just kind of one of those things that the name kind of gets, thrown around. And next thing you know, I mean, I go from in 2001 when I joined EO, all of my clients were in Huntsville, Alabama. Today, 85% of what we do out of this office is not in Huntsville, Alabama.
Okay.
I mean, and so it's a concept that I learned. David Wessels, who's a lead professor for the EO at Wharton program that I get to chair as well. He has a concept. He says, sometimes you need to change your where, not your share. And so, as a practicing professional, I could either be, it was Huntsville, Alabama, going to be my market. Am I trying to get more share there, or is the world my market?
Right.
I mean, we've got clients all, from in Australia that we do calls with. We got clients in Canada. We got clients in Latin America. We've had projects with clients in India. And so there's a time zone that overlaps anywhere, and so it really makes that an opportunity. And here's the thing. It does help that if you can kind of keep somebody's attention on a particularly notable, boring subject called accounting, it gets you some notoriety if you can actually speak on the topic and make it fun and interesting and compelling. And because there's not a lot of accounting speakers that do that.
Right. So actually, let's go back to changing the world. When was there an epiphany? I mean, what was the moment that you saw? Because I do think, having sat through monthly P&L, meetings over and over and over, I think that we've, from a traditional accounting standpoint, I'm accustomed to saying, okay, we're seeing metrics, we're seeing figures, we're seeing things that we should do differently based upon this financial statement. But you really, I mean, it evolved. It became evolutionary. What was that epiphany for you to make that transition?
Well, it's a constantly evolving one. I mean, as soon as I think I've figured out everything I can think of, I mean, you just have this, oh wow, that's how that works, kind of thing. I mean, it started with feeling bad for my clients that you look at these entrepreneurs who are risking their financial lives to create jobs and take care of their family and take care of their community. And why were some successful and why were some not? And a lot of times it was the ones that you might look at and say, this guy has all the tools, he's got all the pedigree, and he fails. And this person, is just fell off the back of a turnip truck and is wildly successful.
Right.
And what I started to realize, I had this client in the tile industry that he was particularly good at marble contracts, big marble installations, and his son had taken over the business, but he would come in and do the marble contracts, and he had created his own accounting system with Excel macros, and it was really, this was very early. This was probably back in the early 90s, and but I was fascinated in just kind of picking his brain because he had this one-page report that was his dashboard of how he saw his business. And it broke every accounting rule that accountants would ever look at. It mixed cash basis and accrual, and it had P&L and balance sheet items all mixed in together. And, and the other people who had tried to work with him as accountants just kind of blew him off.
Sure.
And the more I got to know him and pick his brain and listen to him and look at that sheet, I saw the brilliance of it. I said, this is how his mind thinks. I got to figure out, how do I get in the mind of entrepreneurs? And so that's been an iterative process of learning everything for him. And like I said, one of his cornerstones was labor efficiency. He didn't call it that, but in essence, what I created is very much what a lot of my successful labor management clients figured out in their own intuitive sense. They just didn't have the data. I mean, who knows what they could have done had they had actually better data than that we create now for those companies. The other is utilization of capital, understanding the power of cash flow. Profitability and cash flow are, they both get to the same point eventually, but they're never at the same point at the same time, except in the most simplistic of businesses. And that's been probably the big aha in the new book, is understanding the power. I call it the speed of margin.
Okay.
The number one factor, and this is why I like presenting in international countries, my material, I did some presentations this past year in East Africa and the Middle East, and they've got activity. They want to create entrepreneurship. The challenge is they don't have speed of margin like we do.
Okay.
We have what I refer to, and this may be the title of the next book, I call it the cooperative economy. When you can get margin to move fast through the business cycle from beginning a transaction to the end of transaction, everybody wins. Prices come down to their most normalized level, and nobody has to put too much capital to deploy to turn over the transaction. Everybody wins. Well, in those third world countries, the challenges in their economies, you got people with money trying to get a big contract. Cash moves very slowly and not reliably through the system. And so therefore entrepreneurism is blocked out because it takes too much money to be an entrepreneur.
Right.
Whereas in the US, Canada, Australia, you can launch a business with very little capital. Most of our clients have launched multi-million-dollar businesses with less than $100,000 invested. Next to nothing.
Right.
Happens all the time. I mean, the most of the wealth being created is not by Silicon Valley private equity firms putting millions of dollars of capital to make a bet on a rocket ship that might fail. It's the everyday person doing ordinary, necessary stuff that took $2 bills and rubbed them together and made $1 of profit. And then they paid the tax on that profit and left the other 60 cents in. And they kept rubbing some more. Now I got $5 more of profit. And I want to pay the $2 of tax and leave the other $3 in. And then I keep doing it again and again. And most all of the clients that we work with, they created their capital from retention of profit. And one of the things we talk about is, if you want to be a successful entrepreneur, you got to be really good with delayed gratification. And the entrepreneurs that aren't good with delayed gratification are the ones that destroy their business. And so this was really what drove me to use return on invested capital is now my new standard of establishing profitability targets for every business in the world.
Right.
And the reason being is the minimum acceptable return on invested capital that we see in the private industries is a minimum of 50%. The average is between 75 and 100, depending on business, industry, and model. And my argument to them is, listen, if the minimum accepted return on investment is 50%, why would you ever take, if somebody gives you a 50% CD, why would you ever not keep reinvesting the after-tax proceeds every year and keep riding that? 50%
Correct.
Compounds pretty nicely.
Yeah, very nicely.
Well, this is actually how companies really grow dramatically.
Right.
And it's just not that well described and understood in academia and the business press. They go for the glitz. And unfortunately, most of the time in the business media, the companies that are being touted as being successful are just absolute disasters. You look at how many of those actually, once they get to the press and, they're great, they're not making money yet, but they will.
But they will, yeah.
No, every now and then some of them do, but for every one that does, there's 100 that didn't. And what does that crater look like, when it doesn't end up good?
Well, I like this term on reinvesting back into it and using that as a measurement. We sat down with Bill Lyons. He runs a financial group in San Diego in the mortgage space. And one of his takeaways that if he could go back in time and tell a younger version of him one thing, it was business will always consume the cash unless you have a gateway or a path for it, whether that's reinvesting or to take it out of the business to invest in something else. But the business will gobble it up unless you have a plan for it.
Yeah, and so what we've been able to do is give some bright line, calculatable standards that help entrepreneurs get their head around a singular number. Mm-hmm. So one of the things that helps entrepreneurs is if I can quantify something and measure it precisely, they can hit that target. One of my sayings I'm known for is a man who aims at nothing hits it with amazing accuracy. And so the key is getting entrepreneurs mentally focused on a target. And so, to us, I would say probably one of my concepts that has had the most significant impact on our clients, especially through COVID, is our concept of how much cash should you have in the business. And we think a business is not fully capitalized until you have 2 months of operating expenses in cash and zero drawn on a line of credit.
Okay.
A line of credit's for temporary distortions, not permanent. And so out of our 300 clients, business clients that we manage out of our office, we've had zero go out of business during COVID.
Congrats.
And a lot of that is because of the standard that, we can't get all of them to adhere to that standard, but we have a much higher percentage than normal of those clients that keep the appropriate amount of cash, on their balance sheet, because it's a defined number. It's not I think it should be $1 million. Well, I think it should be $500,000.
Sure.
No, it's 2 months of operating expenses. I've studied the number for years. And even the seasonal businesses sometimes try to argue that they want more. I go, well, you can keep more if you want to, but I'm telling you, even the seasonal businesses, it's still yet to see somebody need more than 2 months.
Okay.
And so it kind of is what it is. And so once they have that number, then once they get fully capitalized, now here's the next play that is golden, as we say, and everybody hates paying taxes. I get it, but listen, my statement I made in the first book is still true. If you didn't pay taxes, there's only two possibilities. You didn't make any money, or you cheated, and both of those are bad.
Right.
And so get over it. You can't create wealth unless you pay tax in the U.S. I mean, there's other countries, that's a totally different discussion. But in the U.S., that's the way it works. And so we came up with, once I get you to full capitalization, because at that point, I'm having you defer to postpone distributions other than tax coverage to get to that point. Right. Once you get there, we run what we call the 40-30-30 play.
Okay.
Roughly, it's going to vary by state, but for the most part, across the U.S., we tell you set aside 40% of profit for taxes, 30% needs to be retained for growth, and you can reliably distribute 30%, but only after you've achieved full capitalization. So then you start to feel the benefit of profitability consistently coming out of the business over and above a true market wage for what you do for the business. Let's don't create fake profit. Let's create real profit over and above real wages. Now, the only thing that I then had to add into that discussion is a warning. The moment that you need distributions of profit out of the business to fund your lifestyle, you're on the slippery road to entrepreneurial hell.
Okay.
Because the business, let's face it, COVID, they had some winners and losers, but it wasn't something that was within your control.
Right.
These are, who knows what the next disruption might be and when it might be. But the moment that you have a consumption demand that is built on profit distribution, you're building a house on sand, at that point. I can give you a pretty high probability of making your salary. And so I want you to, be on the high end of the market wage scale.
Yep.
But live off of your salary as if that's the only income you get. And then as profit distributions come out of the business that the business can't utilize, it's growing as fast as it functionally can.
Sure.
And I do have a belief that actually a business probably can't even execute on more than 15 to 20% of reinvested profit anyway.
Okay.
You have an executional limit at some point. It's not about throwing more money at it. Doesn't make it grow. It actually is far more about execution.
Right.
But it does need some cash. And so at that point, most people end up in that 30% retention still popping out some of that cash anyway, because the business just couldn't utilize it if it continues to grow profitably. Now, what we do like to stamp out, and we've seen a lot of people do this during COVID, is there'd been a decent amount of growth in the last 2 or 3 years. It was bad growth. Wasn't as profitable as it needed to be.
Right.
But we've seen a very nice readjustment of more focus on truly cleaning up the weeds out of the garden and getting profitability back to where it needs to be in the last 3 months.
Well, there's a few business owners I'm thinking of right now that might be building some houses on sand. So I will make sure they watch this episode. So
that's right. There you go.
I want to talk about PPP because that's something that obviously was big coming out of the gates.
Yeah.
A nice stopgap for a lot of businesses, some that I know, a lot that I've heard of. Where are we at right now as far as, repayment policy? Feels like it's probably a moving ship, but what's your take on it?
Yeah, we had some clients start the forgiveness process. Nobody's gotten approval of forgiveness, but most of our bigger PPP loan clients have not started yet. We wanted them to kind of wait and kind of get the kinks out of the system. But so far, I would say the forgiveness submission of data has been smoother than the application.
Okay.
But there again, you're going to have some random things. So it depends on how close to the edge you were playing the original application.
Mm-hmm.
I think some of the people are going to find that the people who applied early, you might actually, you probably can't get everything forgiven because you might have accidentally been given loan proceeds on independent contractors when that was later clarified to say they shouldn't have counted.
Right.
And so some of those people will have to work. I mean, they didn't do anything in error. It was just but they can't get get that piece forgiven. They'll have to pay that piece back. But I would say that the vast majority of businesses are going to be forgiven 95% or higher.
Okay.
And most of the clients that we're seeing are 100. They'll be at 100%. I still contend it's one of the best, most innovative things government's ever come up with. Because here's what we've got a 100-company model that we monitor, and so this is the nice thing about having a national practice is that's not focused in one industry. So we take a blend of all different companies, all different geographies, and we get to watch this data as it happens. And what we saw is as soon as the lockdowns happened in March, accounts receivable shot up and accounts payable shot up.
Yeah.
And so what that meant is there was this constriction of activity, and that's what kills business is when people stop trading and start hoarding. And as soon as the PPP money hit in April, everything went back to normal.
Okay.
And I mean, that was huge.
Okay. I want to go back to content side of things. You guys have a podcast. Sounds like that spun out of the book that you guys, or that you first put out. Talk about what that process is. How do you do it, and how do you distribute it?
I mean, right now it just goes out. If you go to simplenumbers.me, so that's the book website. So the firm we're part of is Carr, Briggs, and Ingram, CRICPA.com. But the content of the book is still simplenumbers.me. And so we push out. There's a newsletter you can sign up for, and you'll get notified of when we produce content. It's kind of one of those that I'd held off producing regular content, until the new book and the merger was complete, because I needed resources to be able to deal with it. But Mike Maxon on our team is the one who kind of manages that, and it's not me always. It's a lot of people that we know in the industry. Mm-hmm. Anybody that we feel like is doing a great job of taking care of folks. I mean, so I've never been I'm not a fee sharer, and it's like, so when we put somebody on there that is a service provider or does things, it's because we respect their work. And, and we've done several of those business coaches. I always say, we try to be Switzerland amongst all the business coaches, and that we love all of them. Yes, I do have a particular appreciation for what Vern Harnish and the Scale Up coaches have done, because Vern did the intro of my first book, and greatly appreciate that. But a lot of that is the fact, and we explain this to all the coaches that we work with, is my passion is to make the biggest impact and help as many businesses as possible, because the leverage effect of if I help them, they create more jobs, they pay better pay, they produce reinvestment back into their communities. These are mostly giving kind of people that probably on the higher end of the donation scale to give to causes and charities and so it's a great ecosystem, at work. And so I'm a big tent guy, not a small tent guy.
Okay.
And so when we put somebody on there, we're not. It's not like, hey, if you buy this thing, I get 20 cents off everything you sell. Mm-hmm. That doesn't work, and it doesn't go the other way either. And I maybe I'm old fashioned, and I might limit some of our scale from that, but I want to be authentic.
Yeah.
And I think we strive to do that. But Mike's done a great job of keeping the podcast going now that we've got a little more resources, to back it up, and that'll probably continue down the pipe.
Okay. Want to shift gears here and talk about blockchain. There's a big bubble, we'll call it, within the crypto space, back in, gosh, I think it was probably 2017, 2018, somewhere in there. But the blockchain technology in itself, what are you seeing as an application within the accounting and or business operational space, either just from your peripheral or with clients that you work with?
Well, I mean, the clients that I work with probably are only dealing with blockchain from the standpoint of them being a vendor to a bigger company in terms of the automation of movement. So this goes back to what I said earlier about if you want to be the most advanced economy, it is about the speed in which cash moves through the system efficiently. And so COVID created a significant change in terms of another movement away from cash and more to electronic transactions. A lot of our clients are either using or having to interface with vendor management systems, which I've seen actually a significant improvement of the way cash moves through the system. Some people looked at those as being very cumbersome in the beginning, but what we're finding is you get better terms, or you got a lot of clarity. You don't go back and forth on the invoices. Right. And so these are all the things that, and I am not a blockchain expert. I do not claim to be, but my understanding is what you're really trying to do is to get a transaction through the system with approvals at gate to gate in the fastest possible speed.
Right.
And move money electronically as everybody does their piece of the transaction. And whether it's through official blockchain capabilities or things that are mimicking blockchain, you're going to see an acceleration of those capabilities as more software becomes integrated to even the smallest of companies, in the marketplace. The operational software that is available to run a small business today is just staggering, of the options to help you, keep track of. We're not talking about just QuickBooks. We're talking about things that allow you to run a landscaping company, or to allow you to run a business, a construction contracting company, to run a massage therapy salon.
Yep.
All of those things. And so the age of software, as that technology comes down to the smallest level, it really starts to finish the last mile of the road to start to really make everything much more connected.
Right. Well, I think what you just mentioned there, I think, is important, especially for the smaller businesses. So whether it is the landscaper or it is the massage, business, I think a lot of those businesses see these systems, right, as being expenses as opposed to investments to run your business more operationally efficient, that allows you to spend more time actually doing what pays you money. But too many businesses, I feel, miss that mark.
Well, one of the things that is spurred a second main service line for us, and so in our traditional services, you do taxes and financial statements.
Sure.
Well, when we created the consulting practice, we realized that we had to create, our term is accounting solutions. Carr calls it client accounting services, to same terms. But our accounting solutions team, we find that on about 30% of our consulting clients, we have to deploy one of those folks in one way or another.
Okay.
Generally, I mean, we'll do a little bit of total outsourcing, but we're kind of agnostic. Even though we can do it, we also know other companies in the marketplace that we're fans of. Give a shout out to Eddie Hood at Ignite Spot. They're one of our favorite total outsourced bookkeeping companies that we share some clients with, and love the work that they do. And so we like to look at it and say, whether we can do it or not, what's in the best interest of the client? Who is the best fit for them?
Right.
And so we look at it that way. And I did a webinar for CRI yesterday that was talking about the benefits of outsourced accounting. Because if you really think about it, a $5 million business needs a CFO 1 hour a quarter. You need a controller 1 day a month. You need an accounting manager 1 day a week. You need a bookkeeper 1 day a week.
Right.
Well, none of those are full-time positions, but yet you have full-time people sucking up all that pay, working down rate. You can only work down rate. You can never work up rate.
Right.
And so if you have a person that's underpowered, you're just missing the things that they should be doing. Now, your business can maybe get away without that, but you're going to underperform, guaranteed. And then and I will tell you, a CFO is the worst bookkeeper they ever created, because they cut corners and I'll get around to that. And it's like, no.
Right.
And so what we tried to devise is, what is we call it accounting solutions for a reason. What is the solution for your need today? Is it in-source? Is it outsource? Is it a fraction? Is it total? I don't really care. What does it need? And in some of this, as you said, it's this idea of sometimes after we do our consulting engagement, we identify some of these weaknesses and say, well, if you really want this data on a regular real-time basis, here's what you got to fix. Okay. So if you can fix it yourself, good. Right. If you need us to help you fix it, we're here to help. If you need an outside consultant that you want to use, great. But here's just the scope. We don't really care. Right. I'm blessed with, I don't have to look forward to find something to do every day. So it's like, listen, it's more about, the challenge.
It's what's needed for your business. It's not what I'm trying to sell.
That's right. And I have this belief, I do not have the personality to sell because I have low resilience, so I'll feel bad. So I just tell people what's needed. Is like, I'm really ambivalent as
right.
not you use us or not. And it still seems to kind of keep us kind of busy. So it's a good thing.
It is a good thing. All right. Well, let's go back in time. Final question. You're talking to younger you, starting off your career. Any sage pieces of advice you've learned, wisdom you've gained along the way that you might have imparted on the younger version of you?
It is the fact that you have no idea what the possibilities are of where your career can go. And so the idea is never, ever, ever stop learning. And nobody, you have to own your learning in your career. And I don't care let's face it. Can we have a show of hands? How many people think accounting is exciting? And so realistically, it comes down to, listen, there's great nuggets of things you can learn and skill sets that who knows where it gets applied. And I just had some opportunities. I started reading the Wall Street Journal. My first job in public accounting, I did bank audits and got hired as a controller for a bank. And then when I went to work for the bank, I started reading the Wall Street Journal every day because my predecessor had a subscription and I just kept it. And I found that, that really, and even today, I would say Wall Street Journal is probably one of the best written. They've kind of returned back to a neutral, middle of the road. They're trying to keep opinion out of an opinion page, and that's where the opinions belong. But in the rest of the news stories, they do a great job, I think, of giving you education about business and educating you on terms that they might throw out there that may not be common. But reading that, obviously reading books, but a lot of it is just, constantly improving your technology skills. I may have a few gray hairs, but I can still hold my own with most of these Excel jockeys. But I do admit that I am no longer the Excel jockey, but I'm pretty good. And most of my peers my age, it's pretty sad, to see them. We do work live in front of the client, and so I'm on the screen, and they're seeing me do things on the screen that, if you don't have the confidence to know what you're doing, you're going to make a fool of yourself pretty quick.
Sure.
But you need to be able to do that because that is the most efficient. That is where you get the greatest output from.
Right.
And I would say secondarily, learning to work live in front of people rather than, okay, here's what I'm supposed to do, and I'm going to go hide over here and figure it out. And then I come back with the answer. Oh, wait a minute. They threw an answer I didn't anticipate. I got to go back over here. Yeah. That's not efficient. And so you've got to get over that lack of confidence to risk. And it is working without a net. You got to work live in front of people.
Well, I like that because I do think that, there's two aspects, right? Continuing education. If you're not doing it, chances are there's a competitor that's right behind you that is, and you're not going to notice until they're already past you, right? You're not even really going to see them coming. But the live aspect, I do think is terribly important, especially for the younger people. Maybe they don't have the confidence, or maybe they're just afraid to fall flat. You're going to fall flat, right? And it's the important thing is, how do you learn from it, and how do you grow, and how do you use that as an opportunity to make sure that you do it better the next time?
And I would remind people is people in services are performed by humans. Yeah. And last time I checked, I hadn't seen anybody perfect yet. I've made plenty of mistakes in my life. The world could use a little bit of extension of grace when people are falling forward.
Yes.
So just have a little understanding there.
Well, I like it. Humility is a great place to end here. So, Greg, I want to thank you for coming on, and I look forward to having you back with the second book out.
Good deal. Yeah, I appreciate it. Thanks for having me.
All right. Thank you.